All right. Hey, thank you today for showing up for today's real estate investing live with your boy Victor Bell. Thank you guys for showing up today. Today you're really going to enjoy this. If this is your first time with me, this is In the Zone with Victor Bell, where I talk about all things real estate, investing, money, growing your company, growing your business, all of that because I love it. And today's is the show about real estate investing. Now, I hesitated making today's show. I talked to a few people who want to invest, but then I also have people who want to do it themselves. So I'm here to help you. Great. That's why I do these shows. And this one was really because someone was like, "How do I do a deal with no money down?" And I'm like, stay with me on this because I've done a lot of deals that didn't require my money down in the beginning. But when I talk to most people right now, they have money and they're like, dude, I don't feel like I have enough to get started in multifamily. But I want to share that with you. So I want to kind of blow this out as a myth. There is no money down deals. That doesn't exist. There are seller finance deals. You can convince somebody to do it, but money still has to be done. A promise to pay somebody later is still money. That's what a promissory note is. It's a note to promise somebody to pay somebody, whether they receive the money, you got it from them, a credit card. Money still changes hands because money is an agreement between two people. But for you people out there who are like, oh, I want to kind of know, this is going to help you. And I'm going to show you something I did on a deal that I did, how me and my investors that I partnered with on the deal made over $1 million on a deal. All right, so... And if you have any questions, leave them in the chat. If you listen to this later, leave them in comments. I'll love to connect with you. We always read our comments. And if you have questions or anything like that, let us know. Subscribe to the channel, and so I can keep making good information for you guys. I don't want to just make you what I want you to make. So that's important for me to kind of say and share with you guys because I want you guys to know that. So right into it. First things first. No money down. Where does that even come from? You have a lot of people that share that information. They're like, oh, we're going to do it with no money down. But what you don't realize is that you're either going to have to raise the money, which that's an easy thing to do. You're either going to raise the money, which I've always done. I've always had partners and investors. The problem is why most people feel like it's a no money down deal. So they're looking for some desperate owner. You don't want a deal that, especially in multifamily, you're buying cash flow. You're making an investment of money. No matter how you get the equity, doesn't matter. So I'll share with you something that I had to do, and I'll show you the deal. This deal I bought years ago. I'm starting off with a small deal so you guys can get your mind wrapped around it, but it doesn't matter whether it's zeros. Like, it doesn't matter whether it was a $1 million deal, $10 million deal, $50 million deal, $100 million deals, because the deals we look at now are $80 million, $100 million, $200 million properties. So, but let's go here. I bought this property a long time ago. I'll show it to you. It's on Zillow. Like I said, so again, you want to be able to see proof, right? This deal we did as a package deal, as a portfolio, but we'll do individual. So I bought this deal for $1 million. I'll show you guys. This is a no money down thing, so I just want to dispel this and how the investor and me, how I partnered on the deal. So I got the deal. We did the deal for $1 million. $1 million. That was the deal. $1 million deal. I got that deal from a buddy of mine who had the deal. They controlled the deal. They bought it. And you can see this. If you go back to, the address is 103 Mango Street in Waihawa, Hawaii. Right? I bought that. If you can see those, you can't really see because of the freaking lighting. That sucked. There you go. You see it right there. See where it says $1 million? I bought that there. I sold it later. You can see that for $1.7 million. So that's real. That's a real deal. It's a real address. So I bought it for $1 million. I needed to put together $250,000 for the equity, and I got a bank loan for $750K. Now, and here's why this is important. I want to kind of express to you guys, how do you raise the money for this deal? If you're going to do a partnership deal where you're going to you still got to do this. I got this from a partner. I got a partner on this deal. He brought in the $250K. And then we got the loan set up for $750,000. Boom. So everyone's concerned about this. You're like, well, Vic, what if I don't have $250,000? Or what if I only have $50,000 or $100,000? Well, then you're going to have to go and you're going to get a partner. Here's why most people don't do it. Number one, this is why people don't think. And I was talking to a buddy of mine last night about that. He was talking about not being able to raise money for a deal. Man, it's dark in here, right? I'll bring this forward. So it's weird today. So, and I was like, number one, right, in order for you to raise money for a deal, you got to know 100% that you're going to stick with a multifamily game. You aren't deviating. You know that this is what you want. You know what, you're not all over the place anymore with your investments. He has money. He's like, what am I going to do to raise the rest of the money? I was like, well, first, you haven't committed to multifamily. Once you commit to doing that and you know that's where you're going to go, you stop looking at other stuff. Nothing else makes sense to you, and you don't make sense of it. So next, you need to know that it's a good deal. The deal's good, right? Cash flows like that deal for $1 million. I knew that deal was good. Matter of fact, the appraisal on that property came in at $1.5 million. We were buying it for $1 million. So I already knew the deal cash flowed. There was money there, right? And the next thing, you got to know the market. The location itself of that particular property was great. So I knew 100% I was going for multifamily deals. I was over anything else. I knew that. I knew that I wanted to have cash flow. I knew that that deal had to have value. We needed to at least 2 to 3 times our money in that deal. Period. I was sold on that part. And next, I knew the market was really good. And the other thing too was I knew I was going to be in that deal long term. Right? Because when we go back to this, I want to share this with you guys. I'm going to walk you down that deal and I'll show you how much money we made on that deal. On a deal that I raised the money from with a partner, right? So if you look at it, I sold that deal for, let me see if I can get it right. So you can see, there we go, 1.7. If you look at the timeline on that deal, I bought it in 2009. I sold it at the end of 2016. So really 9 years. It really was the end of 2016 moving into 2017. So 8 years, whatever, right? 8 years. That deal I stayed in that deal for 8 years with that partner, right? So when you think about that, that's why most people don't know how to raise the money. They want to do a no money down deal. So now you go, cool, you're going to have to raise the money. Let's say you have some money. You need to raise the rest with a partner. Most of them, they're not committed to multifamily as an asset, a vehicle. They're not committed to knowing what cash flow they need. And they're not committed to be able to stay in and double or triple their money. They don't want to do that. They want it faster. They don't know the market or the location that they need to stay in because they haven't really committed to those things. And last but not least, they want to be in and out. This isn't an in and out game, guys. This is an invest your money and create wealth game. So now I'm going to walk the deal. I'm going to walk a little bit out for this. I don't need to go back to that other. Here's how that deal walked out. Hopefully this is good for you guys. Good. So, now, if you're watching this and you got questions, just go down the line. Look, if you're one of those people like, man, what about no money down deals? Convince yourself no money down ain't going to happen. There is no money down. You're going to have to raise the money. You're going to have to get it from a credit card. You're going to have to get it from an investor. If you have some money, you're going to be like, hey, like the guy I talked to the other day, he had 600 grand. He's like, hey, what do I do to get more? I'm like, go find 10 other people with 600 grand. Now you have 6 million. Like, you're going to have to partner and raise the money. None of these deals are ever done but with one guy. If they are, they're small deals. Very rarely do you have one guy banging it out. You're going to raise more money. And once you do that, it's not no money down, period. You have to give that money based on the equity piece. It's got to be somewhere, even if you promise to pay the seller. Now your seller's your partner, and he's your money. That's still not no money down, man. Like that right there alone will really help a lot of people who are trying to get into this game to not be confused about what they keep seeing to think that it's easy. It's not. So I get off of that, man. I get so driven by that and frustrated by it for people to think that it's easy because they think they're going to find some person that's, oh, it's no money down. It's still money down, man. You got to work. You got to go find the money. Where you raising the money is still not no money. So on that deal, here's what happened. Here's what I did know about that deal, and this is how I talked to my partner about this thing. Look, we knew that this was going to appraise for 1.5 million. That's 1.5 million, right? But the lender on the deal, because I sourced the debt, I got the financing lined up. I already knew they were only going to work with our contract for $1 million. Didn't matter for that. They gave us a loan for $750K. They gave us 75%. We got the loan finance. Now, what if you can't get the loan? Partners, it's still the same thing, man. You're going to have to find partners no matter what you do. If you're doing this by yourself, you're trying to figure out how to get in this game. That's why I'm making this video, right? This isn't for the people who are like, dude, I already have $1 million and I want to invest. You're still going to be invested. You're just investing. So the numbers, it doesn't matter whether this was 100 million or this was 15 million, whatever. But this was the debt. This is the debt. Boom, here. We needed 250K. We got the equity. Equity part was done. Boom, it's done. We're at $1 million, all in. It's 1 million, all in on that deal. So when I talked to my partner, I was like, look, I already knew in that specific area. Now we go back to knowing the market and knowing what you're dealing with. I know the rents in that specific property were about $300 lower. When we got that property, it was only renting for $1,000 a month. Right? So when you do the math on that, I'm sharing with you guys. If you watch my videos, I do the same thing all over and over and over again. So let's just do the back math. How do you raise the money? How do you talk to your partners about this thing? You don't talk to them about the buy. Whatever you buy for is what you buy for. You got to look into the future. So $300, which is what we did, times 10 units, $3,000 a month income. This is extra over and above what we bought that was already cash flowing. Times 12 months, which is what happened, minus 5% for vacancies, 34.2 for the year. New income with that new bump that I knew that I needed to work towards, right? Divide that by 5.5 million. I'm sorry, divide that by 5.5. We'll just keep it simple. 36 5%. Divide that by 5%, which was 684,000. And if you do the math, roughly, that's exactly what we sold it for. It was like 700 grand, right? So I knew this. This was my marching orders as a partner. Hey, I found this deal. We're going to need $250,000 to make that deal work. And we already got the financing lined up. So we did that. So I know the upside of this deal, we're working for 780 grand, basically 700,000. I knew that this was the upside on the deal in the future. 700K profit. So I put all my focus on this. I knew that was coming. And I already knew at some point we were going to refinance the property. So in year 3, and I'm talking about how to do this with a no money down deal. So this turned into a no money down deal for us, right? In year 3, we went back and we refinanced the property. At that time, I went to a new lender. We had the 250 in it. We had the loan for 750. I raised the rents $200 during that time. I kept it simple. It was only a couple of years into it. Had to build up to it. You can't just raise rents on people, things like that. It was $200. And I did some other stuff. I go through that on the other one, like how to force value in a property times 10, basically like 24,000. 24,000, divide that by 24, divide by 5%, 480. Remember, we already knew the value of the property. That initial appraisal was 1.5, but they weren't going to keep using that. We had to get it all done again, and it was based on the revenue now, based on our purchase price. So then that put us at 1.5 million, and they let us refinance and do another refinance and it brought that up. They're like, hey, look, we'll do this. Cool. So when they did that, it cashed out to 725. We took out the 250. So my partner, at 3 years, we took out 250K, which was the initial equity in the deal. So now we had no more money in the deal. So we had an infinite return on our money. So this turned into what you guys are talking about, at least for this, a no money down deal. No money down. Why? Because we had no more money in the deal. It was already out. And the financing on the deal, we raised our financing, so we only owed her. It was roughly about $975 on the new loan, but our cash flow was through the roof, way over where we needed to be. And then we held that property from year 3 to another 5 years or so. And then when we sold, we made $700K over and above what we had in it, not including the loan buy down. So if you do the math on that, as an investor, let's just think through this as if you were my partner, right? So even though we're going to use the 250, We got 250, didn't lose it. 250 plus 750 plus our cash flow. We'll just do an overall cash flow range because what happened with the cash flow was we were making roughly about $36,000 a year even after the refi that we held. So that was another what times 5 years, it's 180 in cash flow, 180,000 in cash flow. And I think on the first 3 years it was closer to 4,800 times 3, 14. We'll just go 14,000. It was actually 1440, right? So if you do the math on all of that, so we had 114. So we got his 250 back plus 700 because this was actually the financing that got paid off. So we sold it for 700K plus 700 plus 180,000 for the 5 years that we held the property and we made 36,000 plus 14,000. Right? So that's when I took the zeros off, but that's 1,1,4,4,0. Boom, boom, boom. So we got 1,140,000. So let's just say 144. So that 250 grand turned into 1,400,000. If you were to divide that by $250,000, that was a 576% return on that money right there. Now, really, it was an infinite return because we got our money out. in year 3, the third year, we got 100% of that our equity out of the deal, and we floated that deal. Later, made $700,000, but along the way, while we waited, we made $180,000 over 5 years and another $14,000 while we did the first 3 years. That's the difference. So this part was cash flow. This was cash flow. This was cash flow. Right? Boom and boom. This right here was exit money on there. Now, if you were to take a look at this whole thing, doesn't matter. Now let's just say this would have been a bigger deal. Ooh. Let's say on this deal, instead of exiting, and I'll just keep it simple, 140. Let's say this deal had another 0 on it, right? Because it wouldn't go on the end, right? This would have been $10,140,000 split up between however many partners. Let's say we had 10 people in that deal, 10 people. You went to 10 people and you raised the money on that same deal, and you raised $250K times 10 people. You guys would have all split the $10 million on the exit of this deal. That's cash flow and your money back and the profit margin. That's why this thing makes so much sense. So when you're thinking through a no money down deal, just stop that. Someone has to come up with the equity. Your job, if you're going to go find the deals and you're going to put it together, then you just need to find the partners. Now, if you're going to be a partner, now who really made more money on this deal? Right. Here's why I'm going to share this with you guys. So all you guys that think there's no money in the deal, man, I put everything I had in that deal. Money, time, sweat, equity, blood, kids, everything. Here's how that worked. I found the deal, and I still do this. This is how Bell Capital works, guys, just so you know, right? We find the deal. I fund the deal. I manage the deal. I distribute the money monthly. That's how we did it. My partners, we take care of the tax part. I do all of this stuff. Oh, I do the due diligence. I have the team. I use my relationships. All of that. Boom. That's what I had to do in the deal. You know what my partner had to do in that deal? He mailed the check and he got a check back from me. That's what he did. He took 4 phone calls. 4 phone calls a month. That was it, just for our investor stuff. And now when we do our stuff, we do a one-time call with our investors, and that's it. And then we do updates, and they can call into us at any time. So that's the difference. So really, he made more money than me based on just his returns on that deal. Just his money returns period with a little amount of work. He sent a check. He received checks. He talked to me on the phone a couple of times a month, and maybe one big time a month we had a good thing. That's it. But other than that, this was the work. So for you guys out there that think there's no money down, you're gonna have to raise the money. Number one thing you got to do, you got to know for a fact that you want to be in multifamily real estate, no bouncing around on nothing. If you're going to do this as a business for yourself, as a business, this isn't a side project. This is a lot of work. Next, you got to know 100% that the deal that you're looking at is a great investment for the money. Most of the reasons why people can't raise money is because they don't believe in the deal, period. Or they haven't committed to being in these vehicles because they know they're going to bounce around. The next thing, and I guess I should probably show you guys. One, you got to know you want to be in multifamily. That's first, like I said. Next, you got to know 100% that the deal itself is good. It's going to make you guys money. You're going to cash flow on that deal. You think you're going to double and triple on the way out. We did more than double and triple on the way out of that deal. We quadrupled, whatever the number for 5 is. Next, you guys put in the comments what the number for 5 is because I don't remember what that is. But anyways, then you got to know the market. I knew the market. I knew the location of that property was great. It was surrounded by storage facilities around there. It was a B, C area, but the property was prime location itself. It was great. Looking back, I wouldn't do that deal. That was a beginner deal for me, but I don't do anything different as it relates to the strategy is concerned. And last but not least, you got to know you're going to be in there long term. I knew that I was committed to be in that deal. If it took 20 years, I was going to be in that deal. I wasn't bouncing. Why? Because I was committed to multifamily. I knew what I wanted as a business, as a guy that was putting the deal together. So for you people out there who want to do this on your own, great. I want to help you. Keep checking out I'll move it to the other side. Keep checking out our trainings. Keep coming to my videos. I make these so I can share with you at least what I know. I do everything I can to keep it simple. That might have been a little confusing, but go back and watch the video. That's why it helps to watch these videos again. The other thing that's huge was that if you're thinking about investing money into a deal, this is how I think through a deal. How are we going to make money on the deal? I just showed you. Hey, we're going to put the money down. I'm going to go in with marching orders to know that over time we're going to raise rents. I know rents are going to continue to go on in this country. As a matter of fact, I was just looking at an article today, and I won't bop off topic. This was with Rental Housing Journal that was saying, CoStar was saying probably in 2025 and 26, rents are going to explode because of lack of supply, because all the building, I was just talking about this with one of my investors yesterday. The lack of supply is going to come to a screeching halt. All the deals that you see being built will be completed. You don't have a lot of product that's ready to come online in 25, because if it was going to come online in 25 and 26, it would have had to be financed last year, and nobody was getting development loans last year, right? That said, then you know the real estate's going to continue to trend upwards, right? Because the rents will continue to trend upwards. It's not the real estate when you're looking at multifamily. You're looking at the income, and the income is always the rents. If you didn't notice, as an investor, what did I do? I looked at where we're buying. Are we okay? Are we getting cash flow? Can it cover debt? Can it cover expenses? And can we get a little drip to start? But my job is to target a 5% return on our deals and then go fight for that 5%. Get to the 5%. If we buy and we're at a 4, I know I'm going to 5. If we buy and we're at a 3.5, pushing into a 4, I know in year 2 and 3 or whatever that we're going to do, we're going to eventually annualize the 5% on a long-term hold. So that way when we dump out of that deal, we're getting a double or triple or quadruple or whatever it is on our money. I can't guarantee that will continue to happen, but that's what happens when you are committed to play this game. All right. Now, if you're an investor, you want that. You're like, dude, I want to park my money someplace, get a few phone calls, and later get my money back, and then later get more money, and then later get more money. Like, that's what you want, right? That's as you're an investor, a money investor, you're looking to put your money, hard-earned dollars, and make your money work harder than you had to work for it. You want to play this game. So for all of you out there, let me know what you think, man. I love you guys. I appreciate what you're doing. I'm here for you. If you're interested in investing with us at Bell Capital and you want to see what we do, you want to look at our deals, go to bell-capital.com and just register your account. I don't mind showing you what we're doing. I don't mind showing you deals we look at, deals we don't look at, deals we pass on. I'm not going to show that on YouTube. Just because of the size of deals we look at, they're massive institutional quality deals, and you can't just put that information online. So, but if you're in my network of people, and I know who you are in my house taking a look at deals, then I don't mind showing you what that is. And if you have a question you want to invest with us, go ahead, go to bell-capital.com, hit invest now, take a look at the site, take a look at the documents, register, or you can schedule a 5-minute call with us. We'll answer your questions and get you on the right path. You can talk to a real live person for that. So, but like this video, share this video, comment on this video, subscribe. Thank you so much, guys. We got to 1,000 subscribers. That's been a goal of ours. And now we want to push to 10,000 subscribers. So if you know people who would benefit from watching this, man, let them know about it. Tell them to subscribe, share this, whatever you need to do for this. I really appreciate it. Or comment on this. If you have a question, I will make sure to make a video on that. And I'll answer those questions, or you can reach out to us directly. So have a great day today. You guys keep rocking out. I'm here for you. Always will be. Let's go.